Are you thinking about using an LLC for your real estate investments? Well, watch out because there are a few common mistakes that could cost you tens, if not hundreds of thousands of dollars in taxes. That's why in this video, I'm going to break down the top 3 LLC mistakes that real estate investors make, plus a bonus tip at the end that could save you big money. So stick around so you don't miss it. But first, go ahead and hit that like button and subscribe to the channel so you don't miss out on future tax savings tips. And if you have any questions throughout the video, go ahead and drop me a comment. I'll get back to you with a response. But without further ado, let's go ahead and dive right in. All right, so here are 3 LLC mistakes that you want to avoid as a real estate investor. Mistake number 1, holding rental properties in an S corporation or an LLC that's taxed as one. S corporations are a no-go for rental properties because they can trigger a sale and massive capital gains taxes if you need to move the property before selling to a third party. And you may need to move the property into a different entity for estate planning, refinancing, or asset protection purposes, and this can cost you tens or even hundreds of thousands of dollars in taxes. I've seen it happen many times, so do yourself a favor and keep your rental properties out of an S corporation. Mistake number 2, mixing personal and business expenses. This is a big no-no. LLCs are mainly for asset protection purposes, but if you commingle personal and business funds, you risk piercing the corporate veil, which voids your liability protection. Not to mention making bookkeeping 10 times more painful and tedious, and potentially putting yourself at risk under audit. So here's the solution. Always use a separate bank account for your LLC, and if you need to pay yourself, transfer the funds to your personal account before using them. Your LLC is just simply not your personal piggy bank, and by following this, you can save yourself a lot of trouble down the line. Mistake number 3, combining rentals with active businesses. And we see this a lot with flippers, wholesalers, real estate agents, or brokers, and consultants. But you should never be mixing these businesses in the same LLC as your rental properties. Why? Because active businesses are subject to the 15.3% self-employment tax, and many investors want to elect an S corporation status to help reduce exposure to this tax. But as we covered earlier, S corporations are bad for rentals, so keep your rental LLCs separate from your active businesses. All right, we talked a lot about what you shouldn't do, but what types of LLCs should you use for your rental properties? Well, if you're the sole owner, simply use a single member LLC that is taxed as a disregarded entity and is reported directly on your Form 1040 as if it didn't exist for tax purposes. This means it's largely going to be for asset protection, and it's simple and efficient. But what if you have partners? What if there are multiple owners? Well, in this case, you're going to want to use a multi-member LLC that is taxed as a partnership because you have a tremendous amount of flexibility and you don't get stuck with the S corporation issues that you do when you use an S corporation. But we can get a little bit more sophisticated, and of course, you probably heard of a holding company at this point, but if you didn't, welcome to the concept. In this case, what ends up happening is you will have a single member LLC or a multi-member LLC that's taxed as a partnership that owns several single member LLCs that hold individual rental properties, giving you greater asset protection and flexibility in how you structure your entities. There you have it. Those are the top 3 LLC mistakes that you'll want to avoid and the types of LLCs that do make sense for rentals. If you have any questions, go ahead and drop them in the comments and I'll personally get back to you with an answer. And if you're serious about minimizing taxes and avoiding costly mistakes, why guess your way through it? Our team of expert tax strategists can help you pinpoint exactly what to do to maximize your tax savings and protect your investments. To schedule a free 30-minute discovery call, the link is in the show notes, and I'll catch you in the next video.